Hey traders, Todd Gordon here. This is the free video update this will be Thursday, January 15th, and markets are volatile. And as we've been describing to our subscribers in the premium video, it's volatile, but it's not going anywhere. There's a big distinction. Markets can be volatile with real net change. Those are the best markets to be making money. But right now we're seeing high volatility. It's not really going anywhere. So if anything, it's a premium selling market. But it has a possibility to really break into trend, but so far it hasn't. So here is the update just from the last video we did, which was January 9th. This is actually the video on YouTube. So this is the S&P that we talked about. We did an overlay of dollar yen, and the S&P showing a very tight correlation. That correlation persists, and we're seeing a very nice inverse relationship between the dollar and the S&P. So both continue lower. We have hit the first target that we put for 2002, and we're looking for the second one down at 1965. So here's the updated chart. We're looking for a B wave to set up a 5-wave move down in black circle C. And we did get the failure there in B. We've done 1, 2, 3, and we're looking for 4, followed by one more push down to the S&P towards 1965. This thing, guys, is just a 3-wave move. So everyone's got themselves all worked up into a tizzy. Vol is pushing up, but we've done nothing but drop what? 70 S&P points from the high. Big deal. So let's just keep it all in perspective. And as we go over many times, the quality point is your decision level. Anything above the 100% relationship of A wave or C wave, 1963, is qualified as simply a correction within the course of longer-term uptrend. If we were to break below 100% and get down to the 1.618 relationship, which is actually in 1900, nice and easy to remember, that brings in the possibility that this is not an ABC correction, but a 1, 2, 3. Okay, then if we get a wave 4 failure, okay, now we can talk about a possible top. But for now, guys, while we're above that 100%, still a correction. Okay, so a big reason that I'm not as bearish on stocks as everybody else is crude oil. And this is kind of funny. As you guys may or may not know, I do a lot of work with CNBC. I've been on for 3-4 years now. I've been on several hundred times, and I have a good relationship with the folks at CNBC, and they were looking for some color for me for crude oil. So I'm here on CNBC Yahoo Finance. 44.43 is the projected low in oil. And what was kind of funny is I didn't quite know they were going to use this headline. Oil hitting 44 brings out bottom colors again. I wasn't there because I haven't called the bottom before, so maybe somebody else, but that wasn't me, so it's kind of a funny headline. But anyway, so this was done yesterday, and we were looking for a push down into the $44 to $43 level. That was done when this was up in here, and we did push down. The low is 44.20, so I missed it by 20 cents. So, oh well. Am I saying I'm very good? No, I'm just following a very solid and robust methodology, namely Elliott Wave and Fib. I'm just following the rules, trading the patterns as I see them, and not what I think is happening, but just trade what I see. And the resistance held in the 50, and support was very clearly defined with this 3-level Fib support zone from 44 to 43. We just touched the top, and we ripped higher. So where are we now in crude? I think we're in a 5-wave move up, a 3-wave textbook move back down, followed by another 5-wave move up. I think we're heading towards about 55. If this thing really gets some steam, we can go up to a 38% retracement of green 4 compared to green 3. And that would also correspond with the prior 4th, which is a textbook relationship. Wave 4 tends to go to the area of the prior 4th. All right, so minimum going to be 55, and if this thing really wants to get going, we can go up to 57 to 59. So for now, guys, we're going to be looking for a pullback in wave 4 to establish some long side positions with clients. And of course, stocks that are simply in an ABC correction will help this case, because believe it or not, this decline in stocks is certainly due to crude. Crude drop has brought the deflationary scare back, and it's even being discussed with central bank governors. And when central bank governors talk about deflation, that scares people. I don't want to hear about this. Lower crude is putting more money in retail consumer pockets. That's so much less important than our policy leaders and makers talking about deflation. Okay, that is a big reason why stocks have pulled back. So crude oil has stabilized. And what you'll notice is, let me just do this real quick. This was an interesting intermarket relationship that we talked about this morning in the Wednesday webinar, which is open to everyone. If you weren't there, be sure to sign up. It's every Wednesday on the Trading Analysis homepage. If you look at the S&P futures heading into today's session, I'll just throw the futures on there real quick. Okay, get down to a 1 hour chart. All right, so here, I know there's a lot going on in this chart, but the black open high low close is your crude oil chart. Blue line is your S&P chart. Look what was happening here. As we moved into the fib support for that crude oil market, crude was moving higher as we'd expect. And what was interesting was the S&P was moving lower. Okay, the two are correlated. All right, if you just kind of pull them back here and just throw them on top of each other and line up the scales. Oh yeah, see that, guys? No doubt. Okay, pretty much when crude dropped through 50, right around this level, is when correlation got really tight. But what happened is when crude dropped through 50, look, we made a low here, and the S&P didn't quite get the memo. S&P kept going lower as the crude oil market was going higher. That intermarket analysis gives you conviction in this Elliott wave count. Okay, so that's intermarket combined with Elliott, and that's how you get some pretty ridiculous turning points in the market. All right, so that's it. Leave it there, and I'll see you guys in the next video update.